US President Joe Biden and Republican House Speaker Kevin McCarthy met to discuss raising the country's debt ceiling. The debt ceiling limit is how much the US federal government can borrow to pay its accounts. Although both called their latest talks productive, no deal was struck between the warring sides. These are few of the most crucial days of the Biden presidency, as the deadline to raise the debt ceiling looms large. In the words of US Treasury Secretary Janet Yellen, the US could run out of cash by June 1st. After meeting Biden, House Speaker Kevin McCarthy said, President Biden also issued a statement after the meeting. As of May 18th, the total cash available with the US Treasury stood at $57.3 billion. According to Goldman Sachs economists, the Treasury would reach crucial threshold by June 8th or 9th, as they expect the available cash to drop below the $30 billion minimum that the department would like to maintain. Default could happen at any point thereafter. A country is considered in a payment default when it fails to meet its financial obligations to another country or individual or institutional owners of its treasury bonds. Broadly speaking, there are two kinds of defaults, partial and total. When a country fails to repay a portion of its overall debt, as the name suggests, the situation is referred to as a partial default. When a government declares that it will not be able to pay its debt at all, it is referred to as a complete default. Although such a situation is unlikely in the case of US, but the fact that it has come so close to a possible default is scary. Even a partial default can lead to a severe disruption to the Treasury securities market and can spill over to other financial markets. It would also have an adverse impact on the cost and availability of credit to households and businesses. According to an AP report, the repercussions of a default on the federal debt would quickly reverberate around the world. Orders for Chinese factories that sell electronics to the United States could dry up. Swiss investors who own US Treasury bonds would suffer losses. Sri Lankan companies would no longer deploy dollars as an alternative to their own dodgy currency. According to Moody's chief economist, Mark Zandi, no corner of the global economy will be spared if the US government defaulted and the crisis weren't resolved quickly. The US Treasury Secretary Janet Yellen had earlier warned that a default could lead to a loss of as many as 8 million jobs, cause a significant rise in unemployment rate, and tank the stock market. So why isn't the US raising the debt ceiling? The matter is stuck, as Congress, which holds the purse strings, wants to negotiate a spending cut with the Democrats. President Biden-led Democrats are not interested in negotiating spending cuts at all. In the past, the president has said that the debt ceiling should be raised without any such conditions. Everybody else, however, is counting on the House Speaker and Biden negotiations to yield results. So far, while both have called their recent meetings productive, no deal on raising the debt ceiling has been struck.